Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GOFINTECH Quant interim report. GOFINTECH Quantum Innovation Limited offers a diverse range of services across various sectors. The company's key business segments include securities and insurance brokerage, equity investment, asset management, margin and corporate finance, money lending, supply chain operation, investments. In artworks, the company also provides various financial services, including IPO sponsor and fundraising services, investment banking services, wealth management services, property mortgage and share pledge services, corporate loan and personal loan services, private equity investment fund management, immigration services, financial investment management. The skyrocketing stock price of GOFINTECH Quant. A year of unprecedented growth over the past year, GOFINTECH Quant's stock price has surged by a staggering 226.92%, with a remarkable 235.53% increase over the last 52 weeks. Several key events have contributed to this significant surge in the company's share value. A major turning point came when GOFINTECH Quantum returned to profitability, accompanied by soaring revenue in fiscal Hone, resulting in a 6% gain in shares. Additionally, shareholder approval for loan capitalization further boosted investor confidence, indicating financial restructuring and strengthening. The stock has consistently reached new 52-week highs in December 2025, with trading volumes exceeding daily averages, signaling heightened investor interest. These developments collectively demonstrate the positive sentiment driving GOFINTECH Quant's stock price upward, underscoring a year of unprecedented growth for the company. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary. Revenue growth is primarily driven by the increase in asset management business income, securities and margin financing, and equity investment. Specifically, the asset management segment saw a significant 822% increase in revenue, while equity investment experienced a 383% surge. Additionally, interest revenue, gain on disposal of intangible assets, and other income also contributed to the growth. On the other hand, revenue decline is primarily attributed to the decrease in service income from corporate finance, which dropped by $1,141,000. The corporate finance segment saw an even more substantial 87.97% revenue decline. These factors highlight the key drivers of revenue growth and decline, providing valuable insights for stakeholders. Net income experienced a significant surge, increasing by $106,853, or a staggering 990.95% from $14,637,000 to $150,537,000. This substantial growth in net income is a notable improvement for the company. Profit margins also underwent changes across different segments. The securities segment saw an increase of 43.9%, while the trading and corporate finance segment experienced a decline of -208.7%. The intersegment revenue elimination margin remained relatively stable at -0.2%. Unfortunately, no change was specified for the equity investment segment. Additionally, the expected gross profit margin for the trading and supply chain operations business is projected to be between 0.03% and 0.4%. The company's financial performance indicates a strong ability to generate cash from its core business operations. The data shows that cash generated from operations is $234,119, a positive value that suggests the company is producing sufficient cash to fund its activities. Furthermore, it is stated that the company has mainly financed its operations through cash generated from operating activities, reinforcing the notion of positive operating cash flow. This indicates a healthy financial position for the company, allowing it to sustain its business without relying heavily on external financing sources. The company's financial health has taken a significant hit in recent times. A substantial increase in debt level is evident, with borrowings rising from $415,377 to $714,973, a staggering $299,596 jump. This surge is reflected in the gearing ratio and debt ratio, which have also seen notable increases of 5.5% and 19.49%, respectively. Consequently, interest expenses have skyrocketed by $46,125, further exacerbating the company's financial woes. These developments suggest that the company's debt level and interest expenses have undergone significant changes, posing a challenge to its overall financial stability. The company's financial performance varied across different segments. The securities brokerage and margin financing segment saw a significant increase in revenue from $103,103 to $47,723. The equity investment segment also performed well, with a 990.95% increase in revenue due to net fair value gains. On the other hand, some segments struggled. The corporate finance segment experienced a decline in revenue from $1,297 to $1,156. The artwork investment operations segment incurred a loss of $5,482. Additionally, despite generating significant revenue, the trading and supply chain operations segment performed poorly due to low profit margins. The asset management segment showed steady growth, with revenue increasing from $941 to $3,162. The money lending segment also saw an increase in interest revenue by 16.61%. Overall, while some segments excelled, others faced challenges that need to be addressed for future improvement. Management's outlook and strategy. The company plans to focus on strengthening its existing securities operations and collaborating with other businesses to provide integrated financial services. This will be achieved through the establishment of a trading and supply chain operations business, which has secured stable clients and is expected to contribute to income growth. In addition, the company aims to expand into high-value-added cultural finance markets by leveraging blockchain technology for artwork collateralized lending services. This strategic move is part of a broader effort to build a closed-loop ecosystem that connects various business activities. Management also emphasizes the importance of regulatory compliance and liquidity management, including monitoring liquid capital levels, financing operations, and managing gearing ratios. Overall, the company's strategy focuses on diversification, innovation, and risk management to drive growth and stability. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. The significant increase in trading and supply chain operations costs from $921 in 2024 to $52,358 in 2025 suggests a potential issue with inventory management or supply chain efficiency. Additionally, the substantial jump in artwork investment costs from $493,000 to $825,600 may indicate disruptions in the supply chain, leading to increased costs for art purchases. These changes raise concerns about the company's ability to manage its inventory and supply chain effectively. That concludes the financial summary for GOFINTECH Quant. Feel free to comment below, and I will be happy to answer them when possible.